Welcome back. Now, the Afrimat construction index has shown a strong rebound in several key indicators in the second quarter. This as a low base in the first quarter and a slight decrease in the prime overdraft rate during Q2 boosted the sector. Looking ahead, Dr. Roelof Botha expects a further recovery in construction sector activity. He joins us now for greater insight on the quarter that was for the sector. Thank you so much for your time, Dr. Roelof. Now, a solid recovery in the second quarter, and actually this coincides with the uptick in GDP that we saw in the second quarter. Just characterize the level of growth in the construction sector specifically.
Yes, quarter on quarter it looks very good, 6.8% in real terms versus 3.1% quarter on quarter for GDP. But if we look at the year-on-year data, which is, to my mind, a little bit more important, the Afrimat construction index is still down more than 4%, whereas GDP recorded a 0.6%. That's now year-on-year real growth. So the tables were turned there, unfortunately, and one of the main reasons for that is that we are still waiting for more significant interest rate declines. There was one in July, but we couldn't capture it in this particular index because this is only until the end of June. So we are hoping for further recovery in the third quarter.
For this particular question, let's stick to the context of that quarter-on-quarter growth that we saw in the index. Is employment in the industry corresponding with this growth?
Yes, on a quarter-on-quarter basis, the employment levels didn't increase by much. It was poor, showing 1.5%. It's better than nothing. We're grateful for that. But year-on-year, the employment in construction was actually tops of all 10 indicators.
Oh, wow.
With a 4.5% increase. It doesn't actually feel that way if you look at the construction works, the value of construction works in South Africa, which is still down year-on-year. Not by much. But we should be building lots of stuff. We should be building railways and roads and expanding our harbors. And everybody knows that. And we're doing it, but too slowly.
I mean, it's been highlighted, of course, that the growth in the second quarter came off a low base also from the first quarter. And you're also talking about that kind of year-on-year figure that isn't very encouraging. So would you say that the health of the building and construction sectors is still not out of the woods?
Not quite. Not if you look at the year-on-year data. I'm glad to see that you have actually studied the data. Well spotted. What is, to my mind, quite encouraging, because this particular index, the Better Bond Index of Home Loan Applications, that is, I've got data until the end of August, and that has certainly picked up to a larger extent on the back, obviously, of the lower interest rates. We need to build houses. We need to put people in houses and create jobs in the process. Construction is the most labor-intensive sector of the economy. And firms like Afrimat and many other firms, they are just waiting in the wings. There is so much capacity at Afrimat's quarry sites, and 50% of them are Transnet approved. And that's another bright light, is the improvements at our harbors. Transnet's 5 ports handled 100,000 containers more in July than 18 months earlier. And this shows you what can be done if there is, I call it semi-privatization, closer cooperation with the private sector, because that's all that's going to save the South African economy, is if the private sector becomes a lot more involved in all the decisions regarding construction.
You mentioned home loan applications, that we've seen an uptick there. And I'm just wondering then how you see or how you gauge consumer confidence and demand for property with the cooling down of interest rates that we've seen so far. Do you think that it is enough what we've seen from the Reserve Bank at this point? And really, what's the runway? How much further can we go here? How much further does the Reserve Bank need to go so that this can actually translate into significant demand uptick from the consumer?
Well, I got a little bit of bad news. The good news is that rates have come down from a 15-year high of 11.75, I'm talking prime rate here, to 10.5. And we're grateful for that, 125 bips. But the important point here is that before COVID, the prime rate was 10%.
Yeah.
So it's still higher than it was then, and there's no growth in this economy. And the previous Governor of the Reserve Bank, Jill Marcus, to my mind the best governor we ever had, during her 5-year term of office, the real prime rate, which is simply the prime minus the inflation rate, the CPI, on average was 3.4%. Our current real prime rate, adjusted for inflation, is 7.5. That is 118% higher. The prime rate, and obviously via the repo rate, needs to go down, to my mind, to 7%. With the current inflation at 3%, that gives you a real prime rate of 4%, which is still higher than it was in Jill Marcus's time. Now, I'm not sure whether anybody from the MPC is watching this, but they better get things right. We need much lower interest rates for this country to create jobs. That is our only economic priority, as far as I'm concerned. Not trying to dig a hole and bury inflation in that hole.
Well, we will be getting more insight on that, Roelof, on Thursday when the Reserve Bank does come out with its latest interest rate decision. And of course, as much as we have seen an uptick in inflation, it is still within that target band. So hopefully that will speak to the policymakers for a call to decrease interest rates. Just lastly, as we've been talking about this uptick in the second quarter and the index from the first quarter, do you see further upward momentum as the year goes by?
Certainly. I think Andries van Heerden, the CEO of Afrimat, shares that confidence. He's quite excited about what's happening at Transnet. And if, with a little bit of luck, the world can recover in the next couple of months from the trade shocks, or if they are, if the courts decide that they should shelve them, and the world economy grows a little bit quicker, then certainly some of our commodity prices can increase. Platinum is doing well, gold is doing well, and that bodes very well for the future, not only of the economy, but certainly the construction sector. But we do need those interest rate cuts. So if you happen to bump into somebody from MPC, just whisper in their ear, please.
Hopefully that will happen in the next 2 days, Roelof. Thank you so much for your time and for your insights. They really appreciate it. That was independent analyst Dr. Roelof Botha.